amount of unwinding coming through a lot of these names. In fact, in something like a Raymond, which is also up and about, is seeing a short covering coming through, and India Cement. Well, there you have it. That's looking at a little bit of an unwinding. But on the whole, a lot of stocks out there and we need to watch out for. I'll be keeping an eye on something like a Dabur and Torrent Power.
And well, we'll be getting some views also going on these stock futures from our experts. But before we get them on board, here's a reminder for you all. If you have any queries in the futures and options market, you can call us now on the numbers that will be flashing on your screen, 022-4540-4141. In fact, you can also write to us on our social media platforms from the likes of Twitter or Facebook with AskPQ hashtag. Okay, let's bring in our F&O experts then for the day. We're joined by Gaurav Bissa of LKP Securities and Mr. K. Subramanyam of Altamount Capital. Good afternoon to both. Good morning. I'm really sorry. Good morning to both of you gentlemen, and appreciate you joining us once again on the F&O Show of Bloomberg Quinn. Gaurav, let me come to you first. Some bit of profit booking seen after a gap up opening, and yesterday being a holiday, I think it had to cover up for the gains that SGX Nifty saw of almost 40 points in yesterday's session. But is it a clear sign of profit booking that you're seeing from the top?
Good morning. These are early signs of profit booking, and I would not term it as a reversal of or some sort of top being made. But yes, it's a healthy correction. It's not even started. We are just down in flat in Nifty and 50 points in Bank Nifty. The supports for Nifty are seen at 11,490. A very strong support for Bank Nifty. It's at 28,000 mark, both on the spot side. If there's a small correction and consolidation, that would be quite healthy, and we can again resume the uptrend. For the time being, if somebody has already bought both of the indices, it's better that one start booking profits here, build fresh positions in the lower levels, but these levels, fresh entry is to be avoided.
All right. Well, good morning to you all as well, Mr. Subramanyam. How are you viewing trade on the indices? Are you also cautious while remaining positive?
Yeah, morning, Agam. Yeah, definitely the sort of rise that we have seen, I think date on date, I think from July 21st, the Nifty has gained almost 1,000 points. So that's quite an incredible rise. So obviously natural to expect that we'll have some sort of profit coming about. And even the oscillators indicate that we might be in some sort of an overbought position. So good, it will be good and healthy if the markets actually see some cooling off. And my strategy is also quite similar, where I'm taking some stance where probably expecting some downside on the Bank Nifty. So overall, market where I think we could expect some profit taking before expiry.
Okay, expect some profit taking before expiry, but what sort of option strategies can be employed? Let's check with our experts. Mr. K. Subramanyam has a bear spread strategy for Bank Nifty for today. Before we proceed, let's take a look what that strategy actually means. A bear spread is employed when one expects a moderate down move in a security. Well, in this strategy, a put option of a certain strike is purchased and a put option of a lower strike is simultaneously sold. Mr. Subramanyam, over to you. Take us through your bear spread strategy in Bank Nifty for the day.
Yeah, okay. As you mentioned, we are buying a 28,000 strike put and so setting a lower strike put that is 27,900. But this is for the week coming ahead. Today is the Bank Nifty expiry. So I'm recommending this for the week ending August 30th. So this strategy, in terms of risk reward, appears quite favorable. And the net cost comes to about 90 bips. The maximum one would gain is about 210 bips, and also recommend a stop loss of 30.
Okay, well, Gaurav, you have suggested that you would look to buy on dips, and while you haven't been forthcoming on futures or stock options, say for someone who's a compulsive trader, what would you recommend them to do?
As far as index option strategies are concerned, 28,200 call option weekly series, if you get it around 15-20 rupees, quoting at 28.30, if you get it around 15-20 rupees, one can buy that, have a stop loss of 5 rupee on the upside, targets of 40-50 can be seen. What I'm expecting, there can be a small dip in the Bank Nifty in an hour or so, and then from levels of 28,000 we can see a bounce back coming towards the level of 28,180 to 28,240. So on that premise, I would buy 28,200 call option. once it falls a bit, and that can be a liquidity strategy. As far as stock-specific strategies are concerned, the first recommendation would be buy on Biocon. We have seen a lot of these pharma names have seen good amount of momentum. Biocon for one has been trading in a range of 580, 610. It's now come out of the range. A couple of percentage points addition has been seen in the open interest segment. A small breakout on the cards. Buy above 615, stop loss of 608. Targets 630, 635 can be seen. So that would be one strategy. Second recommendation would be sell on BPCL. Consistent short position has seen getting built. A breakdown on early charts. Sell BPCL futures around 365. Target price of 355 and stop loss of 372.
Okay, so those are two strategies coming from Gaurav Bissa on stocks as well. He is suggesting to go long on Biocon futures and go short on BPCL futures. But some more stock strategies for you. I think Mr. K. Subramanyam also has a long strangle strategy for L&T. Let's tell you actually what a long strangle means. It is when one buys an out of the money call and an out of the money put in anticipation of increase in volatility. And well, this strategy becomes profitable when volatility increases, followed by expansion in option premiums. Mr. Subramanyam, over to you. Take us through your stock option strategies for the day that you have and also the one on L&T.
Yeah, to begin with, the bear spread on SBI. We have seen some pretty smart rise in SBI, but I think close to the levels of 310, 320, we could see some strong correction coming about. And we already seen those signs, so one could possibly take advantage of some correction. I buy 300 strike put and sell a 290 strike put, and the net cost comes to about 225. So the maximum gains one would make is 7.75, and also recommend a stop loss of 1 rupee. L&T, this could be the thick of action today. I mean, today is the day where I think they're going to finalize the buyback, and the market is already taking cues of that, and we have seen some smart rise. So we are going to see some pretty huge volatility, because depending upon the price that is announced, I think the market will adjust. And we could see some volatility movement, and keeping that in mind, recommending buying of a strangle where on any sharp move on either side, one could take advantage of the sharp increase in the premiums. So recommending buying of a 1340 strike call and a 1320 strike put. So the total cost comes to about 35, keeping a target of 65 to 70, and also recommend a stop loss of 10.
Okay, there you have it. That's the view on L&T. As Mr. Subramanyam has already mentioned, that we is likely to have some news on the fundamental basis. So watch out for that. Well, with that, let's bring in some stocks which are buzzing in trade in today's day of trade, and let's address Dabur. Dabur is one of those stocks, as I was mentioning earlier as well, it's something which hasn't really caught up with the rest of the FMCG pack, and we are seeing tremendous strength in this stock. At least in today's day of trade, that's advancing by as much as 3.3%. Its open interest is up as much as 8%. And, the concern with the Indian FMCG counters always will be valuations on a fundamental basis, but that really hasn't stopped a lot of these stocks to continue to gain and move upwards. Dabur is no exception to that trend, and today as well it shows a lot of strength. It's advancing and open interest up as much as 8%. But if you keep the fundamentals aside, let's take in what the technicals as well as the futures and options variables are throwing you in terms of trend. Gaurav, can I come to you on Dabur? Would you initiate fresh longs at these levels, and what levels would you keep an eye on if you would?
Well, it's very difficult to trade Dabur. It's been in the uptrend since past couple of months, and it's not retracing exactly to the lucrative level. Somebody who's bought can keep riding it, but fresh entry is to be avoided. There are better names among the pharma space. Among the FMCG space itself, there are other names that are looking interesting. You're talking about the stock not catching up to its peers. Another name would be ITC at 308, 310 is a lucrative level to buy. I have a source of 300, 298 on the upside, 340 can be seen. So I would focus my energy and my money on something that has given a breakout and still is within the reach of a lucrative buyer, rather than something that's run up quite a bit.
Okay, so technically prefer ITC over Dabur. What's bucking the trend in today's trading session? It is the pharma pack. Let's just pull up the Nifty Pharma Index. It is the top sectoral gainer for the day, and also the top three gainers in Nifty are your pharma constituents from the likes of Lupin, Dr. Reddy's, as well as Cipla. Not only that, besides that, you've also got stocks like Stride Shasun, Granules. All of them have seen gains of between 1 to 2% as we speak. Mr. Subramanyam, anything from the pharma pack, considering the gains that we're seeing for most of these stocks? Would you take a bet on any one of them?
Well, I think considering the rise that we have seen in most of the counters, I would be more comfortable booking profits than taking any fresh buy call on any of these counters. So I think from my side, no recommendation on the buy side. I would definitely recommend booking of partial profits in most of the counters.
All right, well, there you have it. That's more views on stocks coming in. And let's address something like a Tech Mahindra as well, because Tech Mahindra is something which is buzzing. Well, last Tuesday, it was one of the top gainers on the indices. And that was once again following, well, some upgrades coming through from some brokerage houses. Today as well, it's advancing by as much as 6%. Of course, given the fact that the rupee is depreciating against the US dollar as it has been over the previous few weeks, it's something which aids the entire industry. Tech Mahindra is no different in that case. It stands to benefit from those gains as well, at least on an operational level. Today as well, it's gaining by as much as 1%. Currently at around 719, that's where the futures are. Mr. Subramanyam, I'm going to come back to you on this one. Would you recommend going longs on this, and how are you seeing trade on Tech Mahindra at this point in time?
Well, this has also seen some recent rise in the last few days, and it's almost trading near the resistance level of close to 720. So yeah, currently I would not, unless we have some some news flow or where we have some very strong open interest built up was maybe during the day, there's chances are, but odds are high that we could see some sort of consolidation or profit taking. So probably the time is right for taking some profits off the table.
Okay, so largely the view is take profits off the table as the markets continue to scale higher, and that's what we've seen with regard to the benchmark indices in today's session. But let's switch focus and try and address some of our viewer queries. We've got a caller, Rajan Kapoor, who calls us from Haridwar. Hi Rajan, good morning to you, and thanks a lot for calling us and watching our show. Tell us what's your query on.
Hi, good morning.
Go ahead, Rajan, give us your query.
I am an option writer. Please suggest some calendar strategy on Bank Nifty expiry with low risk.
Okay, so this is for today's expiry that you want to look for a calendar strategy, right?
Yes, yes.
Okay, all right. I'll take your query to Gaurav. Gaurav, he's an option writer and he wants to employ a calendar strategy for today in terms of Bank Nifty. Is there anything that you can recommend him?
The basis for calendar spread strategy is more of a volatility arbitrage kind of thing, and this is a strategy that generally is not deployed on the expiry day, for the reason that what it generally means, you either sell a current series call option and you sell and you buy a next series call option or put option for that matter. The point that I'm trying to make is that the option whether to sell or buy will be very, very cheap. You will not make too much of money. In case if the direction goes against you, you tend to lose much more. So the ideal way or ideal approach for calendar spread strategies is to go for something like a Nifty index, and that too 3 or 4 days before expiry, or maybe earlier than that. That will give you a proper edge as far as the volatility arbitrage is concerned. For today, as I mentioned, buying a 20,200 call option at 1,500 rupees will make more sense. You will tend to gain much more from this strategy. You can do a calendar spread, you can do a regular spread, credit spread. You buy a 28,200 call option, sell a 28,300 call option just to reduce your pricing. That would be just about it. But I don't think calendar spread strategy for Bank Nifty on expiry day would be too meaningful.
Okay, well, Rajan, I hope that explanation helps you out with respect to your calendar spread and with what Gaurav's view is. With that, we'll move on and take a query on Facebook. One of our regulars, Nikhil Raja, his question is on the Nifty futures. His question is whether or not, or he should hold the Nifty futures on which he's gone short on at the level of 11,550. His question is, should I hold or exit? At this point in time, it does seem like he's losing out on, well, I would say Well, actually, not too much. It's about 9 to 10 odd points. Mr. Subramanyam, would you continue to hold, or would you continue to recommend to hold these shorts at 11,550? And what levels would you keep a stop loss, or what would your targets be on the short side for the Nifty?
Well, here I think all he has to do is to buy an 11,550 strike call. I think that will be more than take care of any volatility. And I mean, even if there's an upside, he will not lose much. But yeah, broadly, probably could keep a stop loss at around 11,620 thereabouts. But taking conservative view, I would probably also buy a 11,550 strike call and maintain the short.
Mr. Subramanyam, what if I contrast that, and would you otherwise recommend selling a lower level put, or do you think buying a call is much better? How would you contrast both these positions?
That's a very interesting call you made. See, I am not very much keen on selling puts for the simple reason that if in the eventuality of the markets, going, against us very sharply, the puts will tend to rise very highly, and that could sort of the short sell which we have in the futures, that might actually not prove to be very fruitful. So for me, buying of a call would probably be a much more worthwhile. Yeah, if you are a conservative strategy, if you want to maintain the short side, one could, I mentioned 11,550. You could also go and buy 11,600 strike call, where the premium will be pretty low. So, but the writing of a put, considering the fact that the market is in such an overbought position, I would probably not be in favor of it.
Okay, that's some view coming in terms of what strategy to employ or not for Nifty. But there is one space which has been buzzing since Tuesday's session rather. Pull up something like Kajaria Ceramics. Remember, the stock was up and about in Tuesday's session. It was up nearly 9 to 10%. And in today's trade also, we've seen good gains of almost 5%. And the other stocks which are not in the F&O space, but from the same industry, something like Asian Granito, that surged almost 10 to 11% as we speak. And you've got stocks like Nitco, which have been going up in trade. You've also got Asian Tiles. So the entire tile space has seen good gains, at least in the last two trading sessions. But we'll talk about Kajaria since that's in the F&O market. Gaurav, if I could come to you, the sort of momentum that one has seen for Kajaria Ceramics in the last two sessions, 10% higher on Tuesday. Today also it's seeing gains of another 4 to 5%. Would you take a fresh bet here? Or let's say if somebody had taken a long position on Tuesday, should they be booking profit now?
Fresh bets here would be a little bit difficult for the reason there's a strong resistance at levels of 500 and supports are seen at 460. So it's 1:1 risk what we're talking about, but yes, any dip towards 470 can be used to nibble some quantity for target price of 500, stop loss at 460. For people who already bought, yes, it's time to start booking some amount of profit, not the entire quantity, but yes, partial profits should be booked at these levels.
All right, Gaurav, actually, I'm just going to address Larsen & Toubro again with you, because we've had a lot of questions over the previous couple of days for traders who are long on Larsen & Toubro futures. And of course, today, this isn't doing too much. But a lot of these questions are with respect to whether or not it would be a good idea to hedge their long positions on the Larsen & Toubro futures by selling a higher level call or buying a lower level put. How would you go about it, considering we are looking at some fundamental news to come through in today's day of trade?
I think buying a put option would make more sense. Even if you sell a higher strike call option, that would be a covered call. You sell a 1360, 1380 call option for that matter. You won't get too much of a premium, for the reason that we are just about nearing the expiry, a week to expiry, and I don't think you will get too much of a premium. The risk will not be too favorable. Even if there's a 20 rupee drop coming in L&D futures, your option would not give more than 5-6 rupees. Rather, if you buy a 1320 or 1300 put option for that matter, if there's a sudden fall coming in, you would tend to gain a little bit more than what you would get by writing a call option. And there's a breakout about 1340. As long as it's trading below 1340, there will be some pressure that we can expect in L&D in coming days.
Okay, that's NMT for you. Remember, the board meet takes place today to consider the buyback, hence the stock will be in focus, so watch out for that one. Pull up MGL. We've been talking about this counter since Tuesday closing. Remember, there was a lot of build-up in terms of open interest towards this last hour of trade on Tuesday, and by now we know that one of the promoters, BG Asia Pacific, they've sold stake via block deal in today's trading session. And we look at the open interest build-up. I guess on Tuesday it was up somewhere about 25 to 30%. It's 166% higher right now, and the underlying is trading somewhere about levels of 844. Remember, the block deal has taken place at 862 to almost 863, and the current price is 845. Mr. Subramanyam, do you see further downside from current levels now, considering the news has played out, the block deal has taken place in the morning session?
Sorry, I didn't get the stock's name.
Gas.
Pardon?
Mahanagar Gas Limited, MGL.
Yeah, so Mahanagar Gas, I think it has, the gas stocks have generally been on some sort of a buying mode. So I don't have any view as such on this, but my sense would be that the downside is quite limited.
All right, and let's pull up NIT Technologies as well and see where that's currently trading, because NIT Technologies is another one of those IT companies which continues to go from strength to strength. And we have seen a lot of strength in the previous trading session. And if I'm not mistaken, okay, so we are seeing a little bit of profit taking in today's day of trade, though its decline is less than 1% today. There is once again some accumulation in open interest. Gaurav, how would you go about NIT Technologies, which has been advancing? We've seen a lot of strength coming through. Of course, today there is perhaps some subduedness in the stock, if I may call it. Would you go ahead and take today's opportunity to go long further on this stock, or would you remain cautious?
I would remain cautious. It can fall towards the level of 1345, 1340. There's a good support 1320 marks, so 1340, 1345 is the level that I would be buying. And I'll take for target price of 1380, 1400. At 1365, 1368, I would not be too inclined.
Okay, that's NIT Technologies for you. The stock's just down almost 0.7%. Some profit booking seen for this one as well. All right, Mr. Subramanyam, is there anything interesting that's popping up on your chart that you would like to share with our viewers?
Nothing at the moment that really comes to my mind or on the charts which I can suggest.
Anything on Tata Motors, Mr. Subramanyam? The stock's down 3%.
No, I don't think I have any view on Tata Motors. It has generally been on a biggish ground, and though we have seen some sort of bounce back, current levels neither warrants a buy nor a sell.
Gaurav, how about you? Anything interesting that you are tracking over the last 15-20 odd minutes?
Well, if we are talking about taking a stock, buying or selling at these prices, it would make sense if you are buying the strength and selling the weakness. So if you're talking of buying, IT space has been doing quite strong. I would recommend buying HCL Tech, stop loss of 1,005, 1,006, and on the upside targets of 1,030, 1,035 cannot be ruled out. So that would be my recommendation here.
Okay, well, we'll leave it at that. And with that, I'm going to take a moment to thank both our experts, Gaurav as well as Mr. Subramanyam, to join us on this show, take us through their views, as well as solve some of the viewer queries. And with that, it's a wrap in this edition of the F&O Show. But up next, we bring you a chat with the chairman at Liberty House, Sanjeev Gupta, about the company's plans for stressed assets in India.
And at 3:45 p.m. today, we discussed the ways to trade using option strategies like straddles and strangles in the F&O, in the options market with Abhijit Phatak of Define Ad Solutions. So do tune in at 3:45.